Hello traders and welcome to another video review. Today is Monday, June 1st, 2026. Let's take a look at the economic calendar for today. So what do we have here? The only very important data releases. We got Fed Chairman Jerome Powell speech that already passed at 2:30. We are still waiting for the German manufacturing PMI data, which are scheduled for release at 5 to 10. At 10:30, we got S&P Global Manufacturing PMI data from the UK. And at 4 o'clock, we got ISM Manufacturing PMI data from the USA. So today is the PMI Manufacturing Day. Some data releases are already scheduled, so that's about the calendar and the very important, high important market releases. So without any further ado, let's switch to the charts and we start with euro dollar. For our time frame chart of the euro dollar shows breakout higher where towards 50% of the Fibonacci retracement located at 1.1688, sorry. So that's the retracement of the wave C to the downside. As you can see, we went as high as this level, but then we are back inside of the supply zone. Nevertheless, this supply zone seems to be violated already. So, excuse me, possibly we should just remove this zone. Now the next target for the bulls is 61% Fibonacci retracement, which is located at 1.1711. With that kind of the momentum, 56 points, that's quite possible that this market will be moving higher. Nevertheless, this is purely corrective movement to the upside on euro dollar. British pound. Yep, British pound is doing the same thing here. We bounced from the technical support at 1.3374, went as high as 1.3484, but still the next target for the bulls is the previous wave B high located at 1.3508. There is still wave C to the downsides waiting to be developed, but with this kind of the momentum, we might see further movement to the upside above the wave B high, and then bigger and more complex and time-consuming wave B in progress. So for now, the situation is very, very interesting here on the British pound. Looks like the test of the wave B is coming sooner or later. US dollar versus the Japanese yen is back inside of the trading zone. As far as I can see, 159.66 is still the swing high from the last week, and the swing high for the May. Am I correct? Or this is, yes, this is swing high for the May. And for the June, we have very limited volatility at the level of 58 points on the RSI. So quite strong positive momentum is being played out these days. So some kind of a breakout to the upside is still in play on the US dollar versus the Japanese yen. The gold market retraced very, very nicely towards the level of 4,594. Breaks back above this internal trend line and the F flag, but then it gets rejected after the very big upper shadow was made on this movement to the upside. So that was apparently some sort of the rejection pattern. There you go on the hourly chart. You can see, well, some sort of the pin bar. It's not a shooting star-ish, pin bar-ish, shooting star-ish kind of a pattern that directly was made into the 1 hour extremely overbought conditions and very big movement to the downside for the momentum involved. So as you can see, we can still move as low as 4,453 before the movement to the upside will be eventually continued. For now, the bounce from the extremely oversold conditions on a 4-hour time frame chart is done. We are back towards the neutral level on the RSI, and it looks like the market wants to go a little bit lower. S&P 500 new all-time high, 7,607 into the extremely overbought conditions. There is no mercy for any bears here on S&P 500 as the market is digesting the last week Nvidia results and the incoming Tesla or SpaceX, basically SpaceX IPO. So expectations are very high. If there is a disappointment, we might see very sharp, very dynamic and aggressive correction because of the failure expectations. But for now, nothing like this is happening. No change until the fat lady sings, as they say. So we're still moving higher, up and up and up. Local technical support that is worth to pay attention is located roughly around this level, 7,552. Crude oil, can we say that we closed the gap? Almost closed the gap, and now it's trying to move higher. It looks like we might see the movement towards the 94.68 on table as we bounce from 86.34 quite specifically, but the momentum is still negative. We are touching the level of 50, which is the neutral level on the RSI on 4-hour time frame chart of crude oil. Breakout higher in the RSI might fuel the movement to the upside because the momentum should be stronger than usual in that situation. Nevertheless, the biggest intraday technical resistance is still located here, 94.73. Any breakout higher is bullish. Anything below this level is still bearish biased. And the last but not least, the Bitcoin. Bitcoin is weak and getting weaker day by day. Minus 12.48 is the current movement to the downside from the swing high at 82,850, and there is no indication of any sort of the bullish aggression or bullish strength. Quite opposite, if we break below the lower flag pattern, bearish flag pattern, and if we break below 71,000 or 1,330 level, this is another confirmation that the bearish bias is on, and we should see lower levels quite soon. Momentum is still negative, 33 points only. The local technical resistance has been too strong for the bulls. We got rejected after few attempts to break it, and now the market is still moving lower. So the Bitcoin is under the control of bears. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.